Joining us for a CNBC exclusive is GE Aerospace CEO Larry Culp with our very own Phil LeBeau. Gentlemen.
Thank you, Kelly. Larry, you heard Kelly set the table there a little bit. Strong fourth quarter, beating on the top and bottom line. Give me what you're seeing in terms of demand and the outlook for 2026.
Well, Phil, thanks, first of all, for coming to Evendale. I think we feel very good about the numbers we put out today. We talked about the fourth quarter ending very strongly. Orders were up, if you can believe it, 74%. Revenue up 20%. Operating profit up 14%. We saw a 19% improvement year over year in the quarter in earnings per share, and cash flow was up 15%. So just a wonderful way to cap what was an exceptionally strong 2025 for us, where we saw revenues up 38%, 21%. We saw earnings per share up 38%, and we saw cash up 24%. So just a very strong environment, and it's all about supply, because when you look at those order books, demand is strong. I know you had Delta and United out here in the last week. Airlines around the world feel very good about the environment, and we're working very hard to support them.
And yet, you have the stock selling off today. Look, one day does not make a trend, and you've had a heck of a run over the last 3 years. But the stock's selling off today, and you know that there are some on Wall Street, as well as investors, who are skeptical that you'll be able to grow your margins and grow your free cash flow as you were projecting for 2026. What do you say to those people?
Well, time will prove out that the guide we put out today is a realistic guide, and perhaps one we'll beat. But we said this morning that we see revenues up in the low double-digit range. That'll be led by our commercial services business yet again. We think we've got another $1 billion of operating profit growth ahead of us at the midpoint of the range. And we know that we'll see both earnings and cash grow at a healthy mid-teens rate as well in 25.
You know,
and we'll get off to a good start, too. I think there was some confusion this morning around what to expect in the first quarter. We think both our commercial and our defense segments will be better than their full-year guide in terms of the top line, and we should see a sequential improvement in our operating margins. And from a dollars perspective, both businesses in the corporation will be up double digits.
You know that some airlines believe there's a constraint with your ability, A, to manufacture as many engines as are required, and the service times. The time on wing needs to be better. Are you confident that you can lick both of those issues as concerns that may be out there?
So, Phil, I think you're putting your finger on it. It's more a supply and fulfillment challenge than it is one of demand, right? I think when we look at the work we did last year, where our priority suppliers were up 40% in terms of their inputs to us, that's what enabled us to improve deliveries of new make engines by 26%, and in the aftermarket revenues, another 26%. So we'll continue to work in that form. That's why our flight deck, our proprietary lean operating model, is so critical to what we do. And as we look through 26, we think we'll continue to get better. That'll drive the top line as well as the on-time performance for the airlines.
Quickly, you're a defense contractor, and you know the president's comments regarding defense contractors in terms of stock buybacks and compensation. Do you know what those rules are yet? Have they been spelled out by the White House for you guys yet?
I think the folks at the Pentagon are still working through the details with respect to implementation. But from an intentions and objectives perspective, we're fully aligned, right? We want to get leading edge innovations to the warfighters as fast as we possibly can. It's why our engine deliveries to our defense customers was up 30% last year. And we're investing not only in our existing platforms, but in next generation and disruptive partnerships to make sure we do more of that going forward.